Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we are navigating digital finance all together. I'm your host for the evening, Zenith, and I'm joined by my excellent co-host, Tracker. How you doing, buddy?
Doing well, man. Always look forward to the Mondays. Apologize for pulling, basically rugging you on the last week's stream, but I had like basically a family emergency that happened, and I mean 30 minutes right before we went live. So
Oh, it's
unfortunately,
all
that's
good.
life.
Dace and I chopped it up pretty
So,
good. For the
yeah, you
folks that
did.
don't know, last week's episode, Dace and I talked about what's going on with Ethereum. And then also we did a bit of a deep dive into Project Crypto released by the SEC. It was, I like that show a lot. I think the Project Crypto stuff, I think some people are sleeping on it, which I find really hard to believe because it's literally Project Crypto from the SEC. But I think there's a lot of good stuff in there. And even have a bit of a follow-up for today's show if we have time to get to it, talking about how people think that the effects of it might not actually be priced into the markets just yet. But overall, very bullish on Project Crypto. It kind of read like a Santa's or our wish list to Santa for what we wish the SEC would do when it comes to the crypto assets and stuff. But outside of that, tonight we're very excited. We're going to be talking about a new executive order coming down regarding banking and stopping the debanking process. Hopefully, there's been a bit of a culmination with a handful of different groups that have been experiencing debanking, and it's gotten to a point where it's actually been addressed by the president. And crypto, I think, is definitely one of the people or one of the groups of people that benefits very, very greatly from it. Notably because we've been dealing with Operation Choke Point 2.0. The bank has been a large part of that. And this might actually help clear some of it up. But again, it's an executive order, so you got to take it with a grain of salt. Outside of that, though, we're going to be breaking out a video from some big Ethereum players, seeing what they have to say about the entire ecosystem, as we just made a new cycle high yesterday, effectively. So big things are happening in the crypto space right now, and it feels very, very good to be there. Before we get into it, Tracker, am I missing anything?
No, just that since last week, we're at this cycle's high for Ethereum, and Bitcoin, wanted to go up a little higher today on a reback, but all in all, the markets are looking very strong. It looks like the rotation into ETH is still underway. The inflows going into the Ethereum ETFs is outpacing everything. More tailwinds are coming. I think crypto is getting basically a red carpet laid out for it, and we are moving forward and moving up as well. And I think there's a lot. We'll talk about it in the video that we're going to dive into about the Ethereum holder, but it's going to be fascinating and what they're seeing in the TradFi world and everything that's coming on. It's interesting. We're going to dive into this, and it's going to give you more exposure. I watched it today in detail, and I've been following this guy for a long time, and he's very smart, but he dumbs it down for everybody to understand it. Doesn't try to use a lot of word salads, breaks it down, and he did a really good job explaining it as a TradFi and also from the crypto viewpoint, which did a fantastic way of doing it.
Excellent.
So I'm looking forward to it, man. Let's get into it.
Perfect. Well, without bearing the lead, we slapped it on the thumbnail, so I want to address it first and foremost. Up first, we got the crypto markets. We have from the desk of the president, from the White House, we have guaranteeing fair banking for all Americans. This came out on August 7th. So let's see what we got going on here. Section 1, the purpose. Financial institutions have engaged in unacceptable practices to restrict law-abiding individuals and businesses access to financial services on the basis of political or religious or lawful business activities. Some financial institutions participated in government-directed surveillance programs targeting persons participating in activities and causes commonly associated with conservatism and the political right following the events that occurred at or near the United States Capitol on January 6, 2021. The federal government suggests that such institutions flag individuals who made transactions related to companies like Cabela's and Bass Pro Shop, or who made peer-to-peer payments that involve terms like Trump or MAGA, even though there was no specific evidence tying those individuals to criminal conduct. Bank regulators have used supervisory scrutiny and other influence over regulated banks to direct or otherwise encourage politicized or unlawful debanking activities. Operation Choke Point, for example, was a well-documented and systematic means by which federal regulators push banks to minimize their involvement with individuals and companies engaged in lawful activities and industries disfavored by regulators based on factors other than individualized, objective, risk-based standards. There you go. That's the top line summary for this one. At a glance, Tracker, what does this language sound like to you?
Seems like talk about the pendulum swinging the other direction, right? In 2023 and 2024, we had a handful of banks that were literally defunded and liquidated across the banking sector because they had their hands involved in crypto. So now on the flip side, now we're going, like once I said, the red carpet's been laid out. And the best way to look about all this is I regardless of who's involved and who's saying what, if you just sit back and look at the theater that's going on here, 20, the administration, love them or hate them, regardless, that they had a viewpoint. SEC is going to stop and slow down crypto. We're going to suppress it as much as we possibly can, whether it's legally or illegally. We're going to suppress it. And now under the new administration, now it's like the doors are opening wide open, and it's like bring everybody to the crypto party, and it's being very favorable. So why all of a sudden this chain? Is it because a new administration came in? I don't personally think so. I'm more on the belief that they wanted TradFi to pump, to get their hands in as much as they could during that time the SEC was involved, to really kind of stem it down, slow it down, so they can understand it, understand how they're going to basically leverage it and get into it, and also obviously be consumers and buyers of the products to leverage their threats. And now that they've done all that, now that we've gone into the new administration, now it's like, okay, now we're going to open it up to the world, and that's exactly what you're getting in a very aggressive push in this direction. I don't know. That's how I take this whole thing. That's not just this, but also how we got here as well.
I see it. So the timing for me on this one is interesting because I think we finally have a culmination of things going on. I know this is a little bit niche, but in the gaming space, the gaming platform Steam has actually been under scrutiny by MasterCard and Visa for hosting games that they thought might be a brand risk. And it was largely because of complaints that they got from an activist group in Australia against anything like even remotely adult related on there. This is also at the same time, though, if you read the language, it's very clear that a lot of this is politically motivated from stuff that was happening pretty much over the last 5 years, effectively. And then additionally, we also have very clear peer-to-peer payments. That is a not so subtle call out to crypto and anything that is not through the direct banking industry. But at the same time, ultimately, everyone does have to go through a payment processor or bank at some point. And the key point that they're really highlighting here is that it is unacceptable. It's restricting law-abiding individuals and businesses access to financial service on the basis of political, religious, or here's the key one, lawful business activities. So they're just straight up saying that a lot of the stuff that has been banned is lawful business activity. It's just done from people having opposing viewpoints or doing things that someone up the chain didn't like, even though as a payment processor, they're really not supposed to be like involving themselves with that as long as it's legal activity. So this one has raised a bit of a debate in the public sphere about what is the role of banks. They are one of the most heavily regulated industries here in the United States. So it kind of makes sense that the government might be trying to have a bit of a heavy hand with ensuring that people are not being restricted access. But when it comes to the crypto space, again, the timing on this one, we just had crypto week at the beginning of July. And this is kind of right up the same line. So that's why I say it's this culmination of everything going on. But overall, I mean, name dropping Operation Choke Point by name, that's another big one for me as well. So I see that this is kind of like one of those things where it might sound crazy, but maybe the gamers finally raised up and Barron Trump got in his dad's ear and was like, hey, by the way, there's another group that doesn't like being choked out just because the payment processors don't like what they're doing. But overall, the actual teeth of this comes down a little bit later. So if we go down to section 4, here we have removing reputational risk and politicized or unlawful debanking. A, within 180 days of the date of this order, each appropriate federal banking regulator shall, to the greatest extent permitted by law, remove the use of reputation risk or equivalent concepts that could result in politicized or unlawful debanking, as well as any other considerations that could be used to engage in such debanking, from their guidance documents, manuals, and other materials used to regulate or examine financial institutions which they have jurisdiction. The removal of such concepts shall be made clear by each federal banking regulator through formal guidance to their examiners. The federal banking regulators shall also consider rescinding or amending existing regulations consistent with applicable law to eliminate or amend any regulations that could result in politicized or unlawful debanking, to ensure that any regulated firm's or individual's reputation is considered for regulatory, supervisory, banking, or enforcement purposes solely, to the extent necessary to reach a reasonable and apolitical risk-based assessment. So that's the order from the top there. They're pretty much saying you got 180 days to get in compliance. Otherwise, there's going to be some additional scrutiny that comes later on, but we're not going to get that deep into this one on this show. Overall, do you think that this is going to be the kind of thing that gets people to move and start, I don't know, stopping the Operation Choke Point effectively?
Well, I mean, it is using brute force, that's for sure. I mean, they're basically telling banks to open it up. I'm just curious to know about I'm always curious, because obviously the administration isn't the one that's really pushing this. That's the banks are basically allowing this to happen, essentially. Certain people in the banking industry want this to happen. I'm just curious what they're seeing that now wants them to be so aggressive and push forth in this direction. You have a lot of speculation on why, but I'm just curious. I'd be love to know, like, why the aggressive nature all of a sudden. Like, what are they seeing now? Why they want to, not only do they want to bring down the barriers, but they want to sped up dramatically. So that's the thing I find really interesting. Because like I said, earlier when we talked about it, like Silvergate Bank, Silicon Valley Bank, Signature Bank, First Republic Bank, Harlan, I mean, all these banks were basically just shut down because they were doing anything with crypto. And now it's complete opposite. Now, if you don't do what those banks were doing, now we're going to basically find you and come after you. So
agreed.
I think that's pretty fascinating that it's just switched so quick. And keep this in mind, we're only talking Q1 of 2023 when all those banks were going under. I mean, what is that? 2.5 years? And now here we are now, complete opposite. Which brings me, and not just to keep harping on, all this fringe stuff that I'm bringing on from the article, but now my question though is now, okay, when the new administration comes on, is the pendulum going to swing back the other way? Which we don't know yet, but it's just crazy. Welcome to U.S. politics.
Yeah, that's always a possibility, especially when you try to do things through executive orders instead of getting it passed by the legislature. Mm-hmm. But I do think you're raising some very good points. Yesterday, we talked about this one a little bit over on DGen Roundtable. Agent J, myself, Will, and Brendan were on there chatting it up pretty good, getting more into like the philosophical arguments about how to treat banks and stuff. But you bring a good point here, which is that I think you and I think we're both looking at this from kind of opposite standpoints. Yes, we did have those massive bank collapses back in 2023, and we've seen the collapse of many, many, many small and medium-sized banks and kind of this collaboration or conglomeration into the larger banks. And now that we have that, it's not straight up a monopoly. I believe the term used last night was oligopoly, where it's centralized for sure. And when you get that centralization, that's where you can see the regulators start enforcing on individuals, saying that no, individuals cannot use crypto. Individuals we can debank because we just don't like what you have to say online or something, or we think that you're a brand risk. This specifically attacks all those different things. And I think this is in alignment with what we're seeing both from the SEC and from the legislature when it comes to the Genius Act that just got passed for stablecoins, and also all the other amendments to different rules that were made by the SEC to actually use crypto as an asset instead of a liability. So again, I think you have a very good point there, which is this a pendulum shift or is this an actual change in the laws? As it stands right now, this is kind of more of a pendulum shift. But at the same time, though, the president is in charge of the federal agencies. The federal agencies are the ones that are the regulators of the banks themselves. Therefore, this is orders from the top. So until they get new orders, this is how the world's going to proceed effectively.
Exactly.
Alrighty.
I mean, like I said, I'm just curious to see. I'm just curious to see, is any bank going to push back? I don't assume they will. I mean, especially now that the FDIC and all the other changes that have happened to allow banks to own crypto. So I don't really see any bank really pushing back. I don't know why they would push back. I feel like this has already been kind of agreed upon at this point.
Yeah, the other big thing is that we've seen this cycle has been the ETF cycle. And who are the people that are hosting ETFs? Well, it's traditional finance. It's the people like BlackRock and Fidelity and Vanguard and those guys. Those guys also do a good amount of financial transactions with the banks that they're largely communicating with on a day-to-day basis. So it seems to me that this one might be more of a catch-up. Instead, it's a catch-up of what we already seen coming, which is that traditional finance has been embracing crypto more from they want to be the key holders of it, or the gatekeepers, if you will. But now this is saying, all right, now the banks are are supposed to not gatekeep people from getting into crypto, because that's been one of the big issues. We're going to keep talking about it. It's banks and centralized exchanges that are the big choke point to getting cash to crypto effectively. So hopefully this means that banks are going to actually open it up and allow people to transact with these centralized exchanges more freely. So that's the hope that I have for it. I think there might be something I'm missing on this one.
No, I just think there's going to be things popping up that we didn't even think about. Essentially, is what's going to come out of this. So
I agree with that for sure.
There's people that are trying to form different companies that have probably been stymied by the banks. Now they'll be able to get those loans. They can't be rejected because of this. I thought it was interesting with the article we had a couple of weeks ago when we talked about how people can get loans, and how the vision that some of the bankers are feeling now is that it'll be easier to get a loan if you've got crypto supporting, because it's so liquid compared to somebody having a real estate properties, because it's just so much unwinding. So that kind of also feeds into it, that it's more of an asset than a liability. And of course, we already know that, if you have it on your balance sheets on a company now, it's actually considered an asset and not liability. I'm looking at MicroStrategies. That was always looked at as a threat for them. And then once the regulation came in, it helped them as well. So yeah, the banks run the show, but it's interesting because there's definitely a big shift in sentiment. So more to come here. There's going to be a lot more articles that are going to come out that are going to probably shed some light on some of this. That's for sure. I think it's great because this is just another barrier being knocked down, which goes back to what I'm saying. The red carpet's been laid out for crypto this year. I mean, you can't get any more clear. And investors, of course, love clarity. And this is just another piece that's now going to make things more clear. So this could also have more ripple effects into other areas, like I said, we're not sure about, that we're not even thinking about, that will probably start to create, new ideas or new concepts coming out that we haven't, like I said, haven't even seen. So that's going to be interesting.
I hear you. To put a bow on this one nicely, why does this matter? I think that this matters because this is one additional step further that we have not seen before. So we've been talking on here about how the new administration has been getting the president's working group to start looking at crypto, start trying to embrace it, doing all the meetings all over the country pretty much on a monthly basis. We've seen the SEC get in alignment with Project Crypto. We've seen the legislature actually pass laws regarding crypto. And now the reason that I say this is one step further is that this is actually applying regulatory pressure to kind of the private industry, because it's banks and financial institutions. So they're not federal agencies, but they're beholden to federal agencies due to all the regulations going on. So again, this is kind of just taking it one step further. We've seen the reversal of the trend when Trump got elected, and we saw all the pro crypto stuff coming out and actually being made good upon. Now we're seeing it keep going, and we're actually getting the banks to open up more, as opposed to just getting the bureaucrats in DC aligned with the orders from the top. So this is actionable stuff that we're going to see on the ground in the near future. And I anticipate, just like you said, I anticipate this is not the final move. There will be moves and counter moves coming down the line. But overall, though, I think that this is a very good direction for opening up access to the crypto markets and opening up the ability of everyday Americans to transfer liquid cash into crypto assets if they so choose so. Alrighty, tell you what, with that, good sir, it is about time. Do you have your video ready?
I don't really have the video, but you can bring it up. It's Tom Lee talking about the Ethereum, but I didn't really want to play the video. It's an hour long, first of all. But what I wanted to get into and talk about it is, so Tom Lee, why do we care about Tom Lee so much? Well, he's been very accurate in predicting, a lot of the overall markets. Okay. He is, he's been in the industry for 30 years. You see him as a major talking head because he's highly respected. He's on like one of the top traders or investors every year list for every single year. Yeah, this is the one. And they went into this. Now, at the time this video was played, I think Ethereum was at $3,600. So it wasn't that long ago because we've had such a violent move. But what thing about Tom Lee here, the gentleman in glasses here, he has been, he was very bullish in Bitcoin back in 2017. He was telling everybody to be buying Bitcoin back then, along with him and some others on some of the trash. And people looked at him like he was nuts. This guy was crazy. But now he's got everybody running to him, asking all these questions. And when he went through this video, it was fascinating. I would recommend people to watch it because you can really get into it. But what he said that, so BitMine is the company that he became the chair of about a month and a half ago. And he's been the biggest cheerleader. And what they've done is they've basically taken that company and they're using it as building out an Ethereum treasury that you guys might have heard already. That seems to be the hot new trend right now is Ethereum treasury. Some had Bitcoin treasuries. But what's interesting here is he wants to own, he wants their company because he's on the chair board. Once he's on the chair board, now he started promoting. That's why you see him all over. And that's why another reason why Ethereum has probably been, one reason why it's been pumping is because you're in this cat race between them and other companies we've talked about before, which are all here, trying to accumulate as much Ethereum as possible, just like some are buying up Bitcoin for the treasuries as well. He said BitMine is really, they're trying to control 5% of Ethereum is what they want. They want to control 5% of it. That's a lot. But he also said that they're going to be accumulating about 12x times faster than MicroStrategies was doing it back when they were accumulating. Because MicroStrategies wants to get up to holding 1 million Bitcoin is what their goal is too, by the way. They want to own 1 million. And then he brought up something interesting about MicroStrategy was like, so if a company that large or somebody who owns Ethereum or these companies that own all this, not only are they building a treasury, but they're essentially going to potentially be the people who sell this over the counter to as an OTC trade to the US government if they were to try to accumulate into the crypto strategy, right? Strategic reserve. So that's another thing that that's going to put it. So basically what they're doing is they're literally putting almost a sovereign put into the price by these companies holding it, meaning it's going to hold up the price really well. Then he goes into detail talking about why they decided to go after Ethereum. And he's like, the whole market, everyone's missing the whole point on why ETH is such an impressive piece. And he says that there's a lot of tools that Ethereum has that's going to heavily benefit traditional markets. That like TradFi really is going to understand this because now, and you're seeing it already in some articles we've covered, such as like BNY Mellon and Goldman Sachs are starting to tokenize real world assets or TradFi products onto the Ethereum network by tokenizing it. That's already happening. We've already talked about many tokenization pieces that are starting to pop up, but he said that's going to end up being a lot more aggressive in the future. He also said the reason why they're doing the treasury strategy is that you can obviously hold Ethereum, it's appreciating. They'll also be able to stake it and earn the yield on it, of course. And then, of course, the third thing, it'll end up creating a scarcity and buying and holding because no one's going to really be selling it. These companies are holding it. Now, do I believe ETH is just going to keep going straight up like all crypto? Heck no. I still think we're going to end up once markets go into a turn, it's going to be risk off, and then they're going to sell off, and you're going to see now how much they sell off. That'll be an interesting, test to see how well Bitcoin and Ethereum and any others that hold up on these pullbacks based on these companies accumulating it. Now, they also stated that if these prices were to start tanking, they're just going to buy more. They're not going to not own more. They're going to look at it as just an opportunity to buy more. And essentially what they're doing is buying it, their dollar costing average, getting a lower price range on the pullbacks and accumulating more. And on top of that, they're yielding still. So people need to understand these companies aren't buying this for a 1 year, 2 year trade. They're buying these they're looking decades out. This isn't anything that's their strategy. It's many, many years out. This isn't like a small thing. This is going to be something that's going to be very interesting that they're going to go into. He also stated that he also expects, I want to say the next thing I wanted to talk about here. There's one thing he really nailed on, and I think this is something that's been driving me bonkers here, and that is people, you cannot do a PE and understand what the profit and earnings are on these blockchain technologies. There's no model because right now, even he said, the guy brought up in the interview saying, so Tom, what model are you using to justify the price of what ETH is or Bitcoin? And he's like, I don't know. Have you found one? Because I have yet to see one that's actually been done correctly. There really is not a model. Now, he said some people have gotten pretty good. Mosaic was one he pointed out that did a really good job on trying to create a model. But TradFi loves spreadsheets. They want to be able to plug in everything into formulas and be able to spit something out. And he's like, it's not that straightforward. And this is where you're seeing the same problem people are making with don't understand how something can be valued this much that holds ETH or Bitcoin, because he said that's the same issues that, and this is all going to sound familiar because we keep talking about it. People are trying to wrap their head around the value or the price and earnings for these new tools like they did back when the internet came about with 1990s and early thousands when they were trying to figure out, okay, how can you justify Google and Facebook at these valuations. This is insane. But people, because you're using TradFi technology, there needs to be a new models that need to come out to really show justification, because what they're missing is the price per earnings. Mean they don't understand how aggressive this is going to touch on everything. So if Ethereum starts tokenizing most stuff, or any blockchains for that matter, there's going to be transaction fees that essentially act as taxes on all those transactions. We're seeing it now with Western Union and all. They're starting to use blockchain technology to do money transfers because they know it's cheaper and it's quicker and faster. It's going to disrupt how money is going to evolve. You're seeing that with the regulation you just went over, Zenith, and everything. So this is only going to get a much more aggressive. This isn't going to slow down. He was talking about a couple of years ago, people looked at NVIDIA and Palo Alto as just dead money. And he said this is why Ethereum, he thinks, has been kind of just waffling sideways, because Wall Street doesn't look at something as a value play until it's actually an opportunity to make money with it. Well, Ethereum hasn't had a chance to make any money really with it like Bitcoin, because Bitcoin is the digital gold. Everyone's using that really to hedge inflation, and it's a safe bet, and it's another hard asset to be in. That's what's been driving Bitcoin. Ethereum, on the other hand, has all these great all these different products you can use that are great, but Wall Street and others could not use these until regulations started clearing up for everybody to allow them to do this. And this administration now has done nothing but that. They have now opened up the Pandora's box, essentially, for Ethereum to be able to leverage all these new cool tools that Wall Street is going to be drooling over. And that's what he was basically insinuating, because just like NVIDIA and Palo Alto, they look like dead money, but it was brewing, just like Ethereum has been brewing. So he expects it to really start to take off now, that people are starting to get that aha moment, understanding how they can leverage this and benefit off of it. They went into saying that basically Ethereum is basically in the 2017 year that Bitcoin was in. Like, we're kind of in that 2017 year for Bitcoin compared to now for Ethereum, is how he kind of labeled it. I thought was very interesting. He does believe eventually Ethereum could flip Bitcoin. Who knows on that one? But he went into a bunch of other little things. But I think the bigger factor here is now what he's envisioning is not only do they want to own 5% of Ethereum, which is going to have to be very aggressive. He also thinks that Ethereum could very well get up to 40 trillion market cap. When? That'd be very interesting, because that is a massive number, 40 trillion market cap. Near term, he thinks Ethereum will hit 4,000. At the time of that article, we were at 3,600. It magically just spiked right up to 4,000. He's looking for ETH to get back to the 0.05 ETH to BTC ratio, which will put it around 6,000 year in, which kind of sounds eerily familiar to what we all feel. But he said also could hit 7, 12, or 15,000 by end of the year, because of these companies that are starting to do the treasuries. They're accumulating aggressively. Of course, TradFi. He said honestly, TradFi would like this ETH just to basically flatline so they can accumulate a lot more of it now that they understand it. He doesn't see that happen. He expects it to keep on climbing, up and to the right essentially. And the final thing that he brought up I thought was really fascinating was he compared ETH to ExxonMobil. And because he said for the longest time, ExxonMobil from 1990 to 2018, ExxonMobil was one of the top five largest companies in the S&P 500. It was because how they were calculating the earnings. They didn't price in on the earnings, but by the price reserve. And he sees crypto treasuries going to start to fall into that same category on how they're going to be calculated, because of the amount of compound almost liquid that they're going to be generating and accumulating over that period of time. So it's going to be interesting. The fact that he had some aggressive calls in here, he's been a very pretty good bullish person on a lot of things, but he also stated that he doesn't see anytime soon that we're going to have any swan. He feels like we're probably at the fourth inning. If you're looking at a nine inning game, you're looking at about the fourth inning, where this is going to be, we're probably maybe at the beginning or middle of this cycle, he feels, for the business cycle, which kind of ties into the crypto cycle, because the business side really hasn't participated. Like, it really hasn't started really accumulating it yet. There's some pocket stuff, but we really haven't got any major movements. And he also said all of his clients that keep calling in on Ethereum and Bitcoin and everything, they're like, they don't get it. He's like, it's crazy. This is the most hated bull market that they've ever seen, which is really good for us. If you're in crypto and you're holding right now, that's what you want to hear. And what he's saying is basically nobody buys into this. Like, this is crazy. Why? And they keep going back to it's too expensive evaluation. But then I started thinking about it. I was like, is it really? Because you're getting sticker shocked at anything you walk to in this world now because of freaking inflation. So maybe the stocks are just simply showing the reflection of a sticker shock because everything's so freaking expensive now. Maybe they are not. It does look expensive when you're comparing it to the past, but to now, is it really though? I don't think it is. So I think we're just moving into an aggressive time here where you're going to have people FOMOing because this thing's going to keep melting to the upside. If you have that many people on the sidelines, and when I say many people, I'm talking a lot of TradFi people, a lot of people who have a lot of money, they're still sitting on the sidelines and they just absolutely hate this V-shaped recovery we got. And they're not buying it. But he's like, he says he feels like it's going to be just more momentum to the upside. Of course, he's going to be more bullish on that side, on that tone. And then he said, basically, yeah, we could be seeing some really good levels by the end of the year. It could be anywhere between 7,000 to 15,000 by end of the year on the Ethereum price. But like I said, when things, I would not be personally, I would say if you have any long-term investments like traditional markets like 401ks, IRAs, things like that, to myself, at least for myself, I certainly have a lot of exposure. I plan on keeping that because it's such a long-term time horizon that you've got nothing but time. But I'm not going to be also just sitting there watching it pull back when things really go bad. I would definitely be, like we always talked about, taking profits. So things aren't going to go straight up. Anyhow, that was a very interesting article. I don't know if you had anything to speak on that, Zenith, but like I said, I would highly recommend everybody to watch that because it was that good.
You brought up a lot of really good points there. So when it comes to the idea of, does it kind of feel like people are not believing the markets? I understand why people feel that way. And I think the answer there is hyper-financialization, which is that I think in the United States, especially because the US dollar is the global reserve currency, and we've kind of just been printing it into oblivion, it means that people have been looking for a place to park it in order to avoid inflation. And I think that we've largely been seeing that in the market since pretty much since the .com bubble is what I'm seeing. Even before that, back then when we had the, I want to say it was Ben Bernanke with the Federal Reserve, and there was an issue with them actually trying to issue, bonds, where the bonds traders were just like, we don't believe that you're actually going to pay these things, and we think you're manipulating the interest rates to try to screw us out, so we're just not going to buy them. And they ultimately had to come to the table with it. And I want to say that was part of the reason why Bill Clinton was even elected at the time. I know it's a few years before I was enough to understand what politics was, but that's my understanding. But when it comes to the hyper-financialization, the other point you brought up there, which is we're having sticker shock, not just from the asset prices, but also just from overall inflation going on. I think this is personal opinion on this one, but I think that largely the value of money psychologically in the American mind has been very, very warped, especially over the last 5 years when we're shooting up there for, what was it, like 10, 12% inflation for a good year there. And then we still haven't even gotten close to that 2% target. So I think that the markets are definitely looked for the advantage where they can get it. I understand why people are skeptical of line goes up forever and why you just don't believe it in this V-shaped recovery that we got out of the Trump tariffs. And then also we effectively had 2 years there during the Biden presidency where the stock market actually went down, and it took a good 2 years to recover, just to even pretty much since January of 2020. It took most of 2022 and 2023 to get back to an even point there. And then since then, stock market's gone on an all-time high run. But if you look at the fundamentals, like the question is, what has changed? The answer was not much, really. Very recently did we get those price hikes starting under the Biden administration, and now we are hopefully seeing some rate cuts here under the Trump administration, but that's even a question of what it's going to do to the overall market. From the crypto side of the house, if you want, there's always trade-offs on this, folks, but if you want crypto prices to go up, quantitative easing and money printing from the federal government is one of those things that helps push it higher. And it's an unfortunate thing because the reason it works is because crypto is viewed as a very risk-on asset class. So if you're looking for asset classes to park money in, crypto is a really good one for that, and it happens to run aggressively during those times. So that's pretty much hyper-financialization. As far as how to actually calculate the profit and earning return ratio on a crypto strategic reserve or the company that runs it, that is some math that's going to have to be figured out as a new one. Again, personal opinion here, but I think that the overall markets have largely kind of abandoned the P to E ratio when it comes to identifying good, solid value stocks to purchase. Ever since we've seen a lot of tech companies, they've run very high P to E ratios. I want to say it's either like 10 or 20 plus. And then if you get to like biomedical tech companies, those even run like 50 plus. But when it comes to the overall stock market, that kind of stuff is very high risk. So I imagine crypto would probably fit somewhere in there. But at the same time, though, if you're doing traditional finance strategies of trying to build up a strategic reserve, it means that they're looking to downsize or mitigate risk. So it leads me to believe that if you have a strategy where you're just trying to buy up so much of the supply and just park money there and just farm that yield, granted, it does take a lot of upfront capital. You might have to actually issue debt or stock or seed rounds of investors to get that money funded to get that going. And then at that point, you have to ask yourself, okay, what was the return that you promised to these people? Is it going to be able to keep up with the return that you get from your yield? And if it is, how much that yield are you eating? Or are you just going to try to keep rolling that yield into an additional reserve? These are the questions that I think are going to have to get answered here soon. Obviously, we're very early to this game. We're just seeing the first players getting into it. And shoot, I brought up the ETH strategic reserve chart just a minute ago, and I'll do it again here. But when we're looking at this stuff, like, people are getting into it. It's nowhere near what they're aiming for, because even Bitmine here at the top of our chart, their goal was 5%. They're at like just a hair under 1%. And by the way, interesting note, we pulled up this chart yesterday on Sunday, and it was sitting at right here, 833,000 ETH. Now they're at 1.15 million. So just literally over the last day, they've effectively put another $1 billion into, or $1.3 billion into the market for Ethereum, trying to get this up. And over the last 30 days, you'll see right here, they're up 605% on their holdings. So yes,
right.
They're putting money into the markets. I think the rotation is happening. I think if you look at the Ethereum to Bitcoin ratio here, we're sitting at about 0.035. I want to say, would you say the target was 0.05 or was it 0.5?
0.05, which would put you back up towards it would put you basically at that $6,000 to $7,000 area.
Yeah, and that's also assuming that Bitcoin kind of stays around that 120 area. We did see a little bit of movement with it. By the way, the Ethereum market cap right now is $500 billion. I think the number that you pulled for the video there was he was hoping that the Ethereum market cap is going to hit 40 trillion. That is an 80x from the current size. And we're already approaching what arguably is close to the top of the crypto market. So the question is, how much more does Ethereum run?
Right. Keep in mind that. Keep this in mind. When he's saying that, those market caps, that's probably when they're trying to calculate where do you think the top is here? Like, how big do you think this market can be? And he was saying realistically 40 trillion, because he said they've run the numbers. Now, there's a lot of stuff that he didn't want to get into, because it's like, their own findings and what they're looking at, because they're seeing a lot of things I don't think they're going to share necessarily. But because there was a few times he's like, I can't really talk about that, but I can allude to some things, but I'm not going to dive into what our thoughts are and how we're calculating certain things. But yeah,
when I hear that 40 trillion number, in my mind, that's something like maybe a 16 or a 20-year plan at minimum.
Yeah, but that's what I'm saying, though. These companies are looking at decades. They're not looking at, you know what I mean? They're looking at accumulating and a lot of reasons too. I mean, there's a hedge here too. He didn't even touch on the inflation aspect. Didn't even touch on it. He's just touching on the fact that the products are going to be highly wanted. And then and the other thing that you need to understand too is Ethereum has all these L2 chains that are living off Ethereum. So Ethereum is at the forefront. And I'm sorry, but I know people keep pushing Solana and stuff and other things, but Solana is going to do just fine because it's a US based company and they're going to fall right in line and do as they're being told, right? So they're going to be just fine. But the Solana trade has been rotating out of Solana since what, December? You know, everything's been rotating out of Solana, and now you're seeing Bitcoin stall out. Solana and Bitcoin were leading the charge while everything else is going down. Why am I going to be in anything that is basically already had a monster run? The money's rotating into the laggers. And I'm sorry, Ethereum has been a huge lagger. Ethereum should be near 7,000 right now, Right now, it should be at 7,000 where 120,000 Bitcoin is if you're basing it off the Q4 2023 bottom. And that was the bottom. So Ethereum's got some catching up to do, just like the altcoins have a lot of catching up to do. And you're going to have a trickle down. It's going to be a trickle down effect that happens every cycle. And all that is just it's people are willing to take on more risk. And that's all it is. It's just when people have taken on risk, they want to rotate into more riskier assets because they also see value there because they're low down. I mean, that's how you make more money. So that's all it is. It's just a simple way of the cycle rotating down into the lesser assets or lesser smaller caps that have more risk. Yeah, that's all that's calculated. The other thing is
real quick, to support your theory, I just want to pull up the data on this one. So if we go over to CoinGlass, again, it's something we've been following largely. This is the Bitcoin ETF flows. The Bitcoin ETF flow, it's looking pretty good. We had a few days of outflow. We're getting back up in there. But if we pull up this chart and then we go switch over to our Ethereum chart, you'll notice that A, CoinGlass likes to reduce the size for no reason. But B is that the charts tell a very different story, which is that Bitcoin was running pretty solidly for its entire existence, but Ethereum has only really heated up most recently. I think like over the last 30, 45 days, we've seen 7 days that were all larger than any of the previous days for the rest of the ETF's existence. So that's pretty much like a year time span where there was not a whole lot of activity, and then we get this massive influx. So what that says to me is that's rotation.
I mean, it's absolutely rotation. I mean, that's a classic case. But here's the thing, though. We all thought the rotation was coming in Q4 of March, Q4 of 2024. And we all got blindsided. Like everybody thought, okay, this is the rotation. I chalked that up for SEC. I chalked that up for the SEC stalling things out again. That's what I chalk it up for. That whole year, I feel like where we are now is where we should have been last year. But we got pushed out a whole year because of the SEC stymieing crypto, how it naturally forms. So that's kind of what I'm looking at now. Now, the other thing that it comes out to think about during this is what I've been thinking about is this, and this is something I think people need to really wrap their heads around. And you need to have a plan before you get there, like we've always talked about. So as the markets start going up and things start to get real frothy, and I know Tom also in the interview also alluded to this too. He's like, you can't have a market, and he's correct on this. This is 100% true. If everybody's bullish, you're at the top. And that's basically it. So the fact that more and more people are not buying into this V-shaped recovery or not really believers of this rally, that's what you want. And he also went into detail that's very interesting. He said, typically when you'll around the 4th inning, if you're looking at a 9-inning baseball game, right? He's talking about the 4th inning. Typically people start calling for tops. And this is naturally how it happens. This is a guy who has 30 years of experience. And he's one of the top traders in the industry. He knows his stuff. Typically, most people are always talking about, that we're almost done, or this is over, this is the top. And typically, it's not going to be the top. It keeps going. So he said a lot of people tend to start speaking like that up until the end. After the end, and everyone's bullish, then obviously there's your top signals that we try to look for to try to get out, on-chain data and other things that can help navigate through that. So we do want to try to be out before it happens. But my question would be then to you, Zena, once you're towards the top, what are you DCing out into? Like if you're selling positions, what are you thinking about? Because I've got something that I've been thinking about. I was just curious, what are you going to do? Are you just going to rotate into stable coins or?
I think that stable coins make sense. From like a personal standpoint, one of the strategies I've had is to actually depart crypto entirely and take the cash and put it into, I know this might be slightly foolish, but like a high interest savings account, just to have have cash to pay taxes, because that's going to be super fun. Look, I'll be happy to pay taxes when we get that deep into profits. But at the same time, though, the crux of the question is, okay, we're anticipating downwards pressure on the market until we hit the bottom of the bear market. At that point, that could be a year. It might even be a little bit longer. I personally think it's about a year and 2-3 months, depending on where the top is, targeting end of 2026, early 2027 for that bear market low. But the crux of the question is, what do you do with the capital in that time span? Because just because the crypto markets aren't going up doesn't mean that inflation is not. Inflation will always keep going up, meaning that the more that money sits on the sidelines, you're losing value every day by just having it in cash. So I personally think that
Correct.
bonds are not great right now. Again, nothing I'm saying here is financial advice, just my analyses. Is that parking money long term in bonds is a bit of a fool's errand. I think that maybe on the short term, if you're just looking to really secure and hedge against inflation, it's not terrible if you can get a decent interest rate. But again, we mentioned earlier, we expect interest rates to fall. And then as far as the other options, high yield savings accounts, one of them, maybe a certificate of deposit through a bank is another one, but again, dependent on interest rates. So the only other option there is looking at asset classes that will at least hold value or slightly accrue in the time. When you look at that question, the question is, what's the rest of the business cycle doing? Or what's the inflationary policy looking like? So parking it maybe another asset that's something scarce like gold or real estate is appealing. But again, each of those guys has downsides when it comes to market availability, liquidity, associated fees and costs with getting into that kind of asset, and also getting out of it when you need to pull that money back out to get back into crypto. So there you go. Personally, the smooth brain play for me is just high yield savings account. But I feel like you probably have a better answer than I do on this one.
Well, no, I mean, you alluded to those areas. I think, I mean, everybody teach their own, but obviously it's depending how you sheltered your finances. I mean, if you're in a C corp or if you're in a trust, now you can move money across other investment tools without being taxed, because it's I get it when you sell something that's a taxable event, but what I'm saying is you can stymie that by moving it from a different investment without having to basically pay those fees and stuff. There's a lot of stuff you talk to a CPA, a solid CPA. Most of them are not created equal. I'm just being blunt. So good CPA. But if you're in, say, like a traditional like 401k, IRA, or any of this other stuff, keep in mind the administration has already come out saying they're going to push to allow crypto to be in retirement funds. That's a game changer. That's a major game changer. Even if only 5% of money in those 401 traditional market or traditional retirement plans were to do it, that would be a massive move right there in the crypto industry. Just 5% would be massive. But what I'm getting at is, so if you're in these traditional markets and you say you own your crypto, your ETFs, whatever it is, you can easily rotate it into a gold ETF or something like that. Yes, it's all paper. Obviously, the hard asset's always the king, but that's not going to be very liquid. But you can easily move it dollar cost average out of your positions, rotating them into a gold ETF like a GLD. That's going to then be hedged against inflation, and now it's also very liquid. I can sell it the same day. I can rotate that money right into another crypto if I want to do that, and you're still hedging against inflation. There's other ETFs that you can also use that will also allow you to have it. So the retirement vehicles, there's a lot of different products you can use that are still going to help you hedge against inflation. So you're just sitting in just dollars, because obviously, yes, inflation is going to keep kicking in. That's been the key. I think most people are trying to ask that same question. Retirement funds, it's going to be very simple because everything's paired together. If you're in a brokerage account or anything like that, you can still do the same effect. I think the problem, though, is when you're in DeFi, they need to come up with some new products. That's the best way I can say it. Like if they had, I don't know, if there was a legitimate, I know there are a few out there, stable coins that are backed by physical gold. I know they have those. Those are starting to come about, but there's got to be some type of product or something where you can get out of and not just be sitting in a stable coin that's backed by US dollars. Like we need to find something. There needs to be a better tool. I know they're flirting with it. So the sooner the better. And I was just curious to get your take on that, but that's how I'm alluding to, at least with retirement funds, rotating them into like something like the GLD or hedge against inflation tools that you can move into, because if things get bad and rough, gold tends to go up. Well, inflation goes up, gold goes. So I'm saying everything's feeding into it. Not to say you can't have some knee-jerk reactions, but it just seems to hold up. It's going to hold up better in these times in the long run, but you're not really going to make anything, but you'll be hedged against inflation really well.
That's true. I mean, I think we're tracking the same stuff here, which is that we're getting news as we go further into this cycle that we're getting alternatives and options for people to actually access crypto through 401ks and then transfer between those assets. I don't have my source on this one, but I'm pretty sure I saw some news recently saying that the 401ks just opened up a little bit more to actually start holding not just those ETFs, but maybe even potentially some spot crypto. Again, that doesn't quite solve the issue of what do you do in the bear market. But if you have the ability to stay inside of that closed ecosystem and not induce a taxable event, that's how you can really compound that growth and not just eat the losses from taxes on capital gains and stuff. As far as the access to those markets, I think it's a good thing, which is it's opening up more capital. Because, oh, shoot, I forget my stats on this one, but I want to say like the entire 401k market right now is like $50 trillion or something. Like, let me look this up real quick.
No, it is. I'm looking it up as you're talking. It's 43. It's 43.4 trillion.
All right, we were close. We're in the ballpark.
Well, I wasn't well, because when you say 401k, it's more than just 401ks. There's other retirement plans like IRAs and things like that. But ultimately, 43.4 trillion. If only 5% of that rotated into crypto, that's I mean, what is that? Close to a half a trillion, a little less than half a trillion.
Yeah, I mean, to give you some context on that one, currently the crypto market cap is sitting at like 3.6, 3.7, maybe 3.8 trillion with this most recent move. I want to say Bitcoin is sitting at like 2.6 trillion of that. And then the next markets, we already surpassed gold, like we surpassed silver like a year and a half, almost 2 years ago for market size.
Yes.
I think we're coming up on Apple, Google, and Nvidia for market cap. Those guys are sitting about like 3 trillion market cap. And then the entire market cap for gold is $20 trillion. So crypto's climbing that
pause
ladder
right there what you just said. Zena, pause what you just said right there. The largest companies which ones are they? Are they a basket of them? Or I'm just trying to say, what's the
Nvidia, Apple, and Google.
Right. So those are the same companies. Well, those are those companies that had such high value that nobody knew how to how to put a price earnings on because they were so difficult to understand. Yeah, look at that. So Nvidia is 4 trillion. I mean, Bitcoin's not even the whole market. So Nvidia is worth more than the entire crypto market.
I think Nvidia is a bit of a special case here.
It's AI. It's it's got a lot. It's in the right niche. Yeah, I get it. But Microsoft, the Apples, the Googles, the Amazons, those are the big tech giants that nobody knew how to value. If you told them they were going to be worth this much at this time back in the 1990s, people would be laughing at you like you're a Looney Tune. And this is exactly why people are laughing at. They can't understand how you can get to 20 trillion in Ethereum or something like this. Like there's just no way. But you know what I mean? Like these companies have more than surpassed what the expectations of these companies were going to be. And it's because of the evolution of technology. That and, of course, government subsidies and support, but that's here nor there.
Yeah, that one's a bit of a black hole for tinfoil hat theories, but that's not today.
But I guess what I'm saying here is like there's so much upside on what's happening, but don't get caught. One thing I will stress to everybody who's listening: do not get caught up in the FOMO or the I'm not going to sell. I'm just going to keep diamond hands and hold forever, dude. Don't do that because you don't want to ride this thing back down and regret it. I mean, if anything, me personally, I will definitely be taking profits as we get closer to topper areas, but I don't think we're anywhere near that. I know there's been a narrative been kind of floating around with a few people thinking that, most people are starting to look at the 4-year cycle. Everyone's really stuck on the 4-year cycle. And I'm going off on a tangent, but stay with me on this one because the 4-year cycle is interesting. Because the 4-year cycle, everyone's thinking up 4-year cycle. This is it, which is supposed to come when? It's what? Into Q3 this year, beginning of Q4 of this year. Is that the end of the actual 4-year cycle?
The true 4-year cycle would put you at the end of October, beginning of November. If you are kind of savvy with it, if you measure top to top, it's looking more like 3 years and 11 months, which is why I'm personally targeting beginning of October, end of September, which, by the way, that's coming up pretty soon.
So my question to you then, because you seem to be in that camp, are you going to, regardless of what it is, are you going to look at that time and say, I'm going to start peeling things off regardless, just because? Okay, you are. Because I'm going to be curious. Go ahead.
This one's more of a personal anecdote, which is like, this is my first full cycle in crypto. Got full like self-custody back in early 2022. Part of the whole strategy for me personally, this is personally not advice for anybody, but I understand that first full cycle, I want to minimize mistakes. The way that I'm doing that is like literally 2 years ago. I already like talked myself through this and said, all right, there's certain indicators that I'm looking for where I will assure that I take profits to at least lock in something. Top of the 4-year cycle is one of those. I'm not saying it's the entirety of my bag. I'm not even saying it's a good chunk, but it's at least a notable portion so that I can at least lock in something. I will say the more conversations I have with folks, the more I'm understanding and actually understanding the argument for why the possibility of that more extended cycle is a possibility this time around. I get it. At the same time, though, I try to approach this from a conservative mindset. So until the trend is broken, I will assume the trend will hold. Once I get confirmation, then I will adjust my hypothesis. But until I get confirmation, I'm sticking to it. So that's why I'm that's why I'm 4-year cycle man over here.
No, that's good. That's good. Like, don't let you have a plan. You stick to your plan, and you shouldn't deviate. I guess what I'm looking at it is this. So, kind of goes after, like, I keep hearing more and more information to provide that more. So a lot of people don't like this rally. A lot of people aren't believers. There's a lot of people on the sideline. There's traditional companies now starting to be a fight to grab as much as they can. Like that chart you showed, Bitmine, they only have like 1%, not even 1% yet. They want 5. That's a 5x more accumulation. These other companies are going to be accumulating even more, trying to fight for the same rate. So you got this kind, and then you don't even know which other companies are going to pop up in here. By the way, I love the pulse chain sack. I mean, that's just beautiful on so many. That's just freaking awesome.
It is nice to see.
It is. But so if you've got all this coming in here, and buyers are accumulating, and they're not selling. They're making it clear they have a long-term horizon. They're going to be accumulating and building out treasuries. Heck, they're probably already thinking like they're going to be over the counter selling to the United States government or something, And of course, by doing that, they're going to get in good favors, probably get some kickbacks, like maybe tax exempt, all these other perks you get by doing these type of great things, right?
It must be nice.
Basically forming a partnership, right? So. And if you have all this, what I'm saying, if you've got more people on the sidelines that haven't quite got into it or don't like it, and yet we're still, moving up, and at the same time, more regulation is going to keep opening up more and more. Is it a honey pot trap? Is it a trap? Is it you're setting yourself up by not getting out right around the 4-year cycle, or do you think that this extended cycle could happen because of quantitative easing, all the other tools that that they have are cutting interest rates, I should say. I don't want to say quantitative easing, because it's really going to be cutting rates is what's going to be the first lever if they do anything. They'll be cutting rates, and that should help boost the economy and their traditional market. If traditional markets are rallying, then it's going to rally. Kind of goes back to what I said. The last whole year we lost, I think, is because the SEC stymied the rotation. I think we should have been where we are now last year. I feel like we should have been if we weren't getting stymied for this whole year. That's why Ethereum didn't play. Didn't rotate. It tried in March. You saw the GameFi. You saw the alt starting to make a big run in March of 2024, and then it just died, and it died hard, and it was because of just constantly being blocked by regulation. And now here we are where regulation's complete opposite. So it's like things are back on table, and not just back on table, back on track, but aggressively back on track. So I don't know. I think if you are going to obviously stick to your guns, do what you're going to do. I can see this easily going out further. But it's one of those things. It's a game of chicken, right? With the market, how long do you want to hold, and then you want to take those profits. So I'm not saying you're just going to keep on holding, but that's kind of what I'm seeing form, and I'm hearing it from a lot of smart people, and I'm hearing it from others that seem to be really on the ground, and what they're seeing here. And Tom, that interview I watched today, just kind of reiterated that he's just seeing so many people hating this market. And then he also said after they got off the phone with all their major big clients, I mean, their clients these are billionaires, these are millionaires, these are expensive, wealthy investors and different entities that they're working with. By the time they get off the phone with them, they feel like they've not only did they justify it, but they've just reiterated even more reason why be more convicted. So it was just like, it's just an interesting. So I don't know. I don't know.
Definitely don't live in boring times. That's for sure.
No, not at all. Not at all, man. This is interesting where we're moving into. I mean, but the article you just had, the stuff that just keep every week, it's like opening up Christmas for crypto every week. But it's crazy, but the prices haven't shown. Yes, we've gotten some Ethereum. Ethereum still is, like I said, should be at 7,000 right now. It's still behind. You have Solana and Bitcoin who rallied hard going into last year, but what else is really rallied? Yeah, pudgy penguins. There are some outliers like that, certainly, but really nothing's really gone parabolic or really taken off. Certainly in the alts area, it just really hasn't. There's been some outliers, but it's spotty at best. You have not seen that trickle down. You got a little taste of it last week when you had some of the mid cap or large cap companies starting to move with some of the movement that you saw. I mean, you saw that, but that's about it. You really haven't seen this big move yet. So I mean, And maybe I'm just so numb to it because we've had so much downtime, but honestly,
No,
I need to see more. I got to see a lot more before I think that we're anywhere near the top personally. Because if this is it, this is really disappointing.
no, you're not wrong. As far as when it comes to the recent price action, you're entirely correct, which is we've not seen any big runs on anything. But if you look further back into the cycle, we've definitely had runs on an overall market back when the Bitcoin ETF launched. We saw another run pretty much towards the end of 2024. And then we've also seen individual tokens have their day in the sun when specific things happen to them. Notably, back in the early run during the Bitcoin ETF, Solana was a bit of a standout. I want to say it did a 20x on that run. It started off around like $10, ended up close to 200. Since then, it's bounced around between 180 and 120, even dipped down to $100 at some point, and then also rallied all the way up to 300 effectively. XRP is another example as well, which is that for a long time, it was just sitting around that 50-cent mark. They win their third court case, boom, goes to $3, that kind of stuff. There are individual winners in this market that do exist, but the overall market has not taken the same shape that we've seen in previous bull markets. It has not been that smooth-ish parabola towards the upside before you get into the cycle. We had a full year of 2024 there where we pretty much just had sideways action. And then again, since the beginning of 2025, we hit an all-time high at about $113,000. Della tried to retest it, but then since then, we saw a dip all the way back down to $59,000. And now we're back all the way up at new all-time highs at $123,000. So this cycle has been honestly anything but regular. If you really zoom out and squint, it does look somewhat regularish. But again, another big point I want to highlight to people is that traditionally, you don't see all-time highs for Bitcoin before the halvening happens. We hit all-time highs a month and a half before the halvening was set to happen. Even at that point, it's usually sitting around half of the previous all-time high. But instead, this time, we made new all-time high. So yeah, look, you're not wrong. I understand why people are saying they're not thrilled with this bull market, just because it has not adhered to the expectations of previous cycles. It has had winners and losers throughout the whole thing and at different points for different people. But overall, I think we are getting to the point now where the irregularity and where we're sitting is getting people asking the question, is the 4-year cycle going to hold? Personally, I think it will hold to a degree. If anything, I think it will hold from the low to low standpoint. The highs have always been the one in question, but the lows, those are the ones that actually adhere to that 4-year schedule pretty much to a T.
Okay. Roger that. And I'm also looking at I don't know. It's been a tough pill to swallow, I think, for a lot of people that have been close to crypto, because you could have just sat chilled in Bitcoin this whole time and been just really, here, I get it. No, here, there. But Bitcoin was obviously, the trade was either Bitcoin or Solana. And then the rotation into this year, going into the Ethereum trade, was on, obviously, in the end of beginning of Q2 of this year was the rotation, to perfect timing to get into the Ethereum. You're never going to pick the bottom or do it, but I think though, like I said, when we had that right around March, when we had that peak in 2024, that felt like the rotation, but it got stymied hard. And if you think about it, you had almost an entire year of Ethereum and the alts being just stymied for a year. So I feel like we lost a year, and I feel like we're going to get that year back. I don't know. It maybe not the whole year, but we're going to get some of that time back. And I think that's going to be more than justification. That, and also the regulatory regulations and the what the Fed is going to have to do at some point. I still feel like they're going to be definitely cutting, because I think everybody knows that that's coming. So that will be coming as well. We shall
Agreed.
see.
I'm right there with you. I think it's coming. The question is when. I think a lot of people are saying next meeting and the next and the one after that. But I'm a little skeptical on the 3 rate cut for 2025. I could see 1, maybe 2, probably another one early 26. But we're just going to have to wait and see, because it appears that Jerome Powell marches to the beat of his own drum. And he's looking at his data, doesn't really care what the pressure is saying. He's going to do what he does and talk to the people that he's working with. But it's also possible we could see some change. We are getting a new board of governor elected to the board, so that could be a shakeup of sorts. But again, we'll just have to wait and see. Outside of that, though, before we get out of here,
obviously, well, he's done. Jerome Powell, he's done. He's done. What is it? Is it May of 2025? He's done. He's out.
26, yeah.
Is that essentially? Yeah, 2026. Yeah, he's out. So any news coming out that they pick somebody who's in favor to be more aggressive, I mean, that would be another reason to get the market going, juiced up to zoo. So a lot of things coming that could be events that could definitely trigger more of a rallies. We shall see.
Definitely. But yeah, before we get out of here, do you want to bring up one final thing? And also, it's a bit of a treat to the people that have stuck around, like our buddy Will Stevenson. He answered your rotation question by saying he's rotating crypto into piles of cigarette and liquor.
Hey man, if there was a hardcore recession, that's what you want. That and
not terrible.
candy, that all those stuff that people want. You can throw ammo in there too. Why not?
Yeah, the liquidity on the market's a little hard for the selling standpoint from an individual, but if you're an FFL, it might be a little easier. We also got Moonpilled Rational Optics getting in here. He's being enticed by Will, and also saying that so going to Bass Pro Shots put you on the government list. Well, according to other reports, it might have. So stay frosty out there, folks. But before we get out of here, final thing, I would be remiss. Major updates coming this week. We do have some financial numbers coming out. So obviously today's Monday. We did not get anything. But if you do look closer, we are going to be getting consumer price index, aka inflation, tomorrow morning. And after that, we're also going to be getting the producer price index. So these are the inflation measurements from consumer standpoint and producer standpoint. We will also be getting the initial jobless claims on Thursday as well. So some economic employment data will be coming in as well. Big week here, so please pay attention. Thankfully, we don't have to deal with another Federal Reserve meeting for another month. The next one is September 15th. So keep an eye out for it. Keep an eye on Polymarket and FedWatch to see what the rate probabilities are. But just know a lot of stuff can happen in 30 days, especially for that kind of a prediction. But outside of that, Tracker,
Zena,
do we have any final? Yes, go for it.
Yeah, I do have something that's pretty funny. I saw an article on one of the mainstream CNBC, and they were saying how Wall Street is concerned about the reliability of the government inflation data. Like, really? Now you have a problem? I've had a problem since they created it. Now you're concerned? That's a nothing story, but I just thought that was just like now? Finally now? So no, a lot of good points are going to be coming out here. I think, we're I'm still a believer that I think things are going to keep marching higher. At what aggressive rate, I don't know. Pullbacks will be inevitable. How much of the pullbacks? That's the top opportunity to see how well the bears or what they can even muster right now. Because right now the bulls are in complete control. It's going to be interesting. And as this is happening, you're getting a lot of people liquidated. Oh, that was something else. I'm sorry. I did want to add to this. That was something else. Please go back and watch that Tom Lee interview, guys. I can't stress it enough. There's so many good nuggets in there because he got into why he thought Ethereum price has been suppressed. And he said it's a lot of it's a lot of the games that are going on right now. People are trying to liquidate and leverage. They're trying to stymie putting puts on and things like that. He said that's clearly evident that's been going on with the Ethereum price, which is what we've been pounding the table on for a while here, that we think the Ethereum has absolutely been suppressed because of the short interest and people just trying to bog down on it, which we highlighted a couple weeks ago when we showed you guys the amount of short interest that was occurring during going into Q1 of this year. And it was just absolutely, screaming as a short squeeze was about to get put on. And he also felt like, this is the interesting thing. People are talking about recession and all these talks of recession. And he felt like that the tariff talks that we just got kind of out of, we're on the tail end of it. That was the recession moment. So something else to think about.
Very true. Very true. By the way, if you are interested in learning a little bit more about why we don't trust government data about when it comes to jobs and inflation, I did post a nice little video for our members over in the Telegram channel. It is from the YouTube channel How Money Works. He's a TradFi bro, but he puts out good content on a weekly basis, covers a lot of macroeconomic stuff, whether it's jobless counting or house prices or the global reserve currency. Definitely give him a follow and watch out his stuff. It's good stuff. It's like 10, 12-minute videos pretty much. But yes, posted the link in the Telegram chat, which, by the way, you can join our private Telegram community if you head on over to walktheblockndf.com. You will find our membership tab, and then from there, you can go ahead and click on the link to join. We like to say that the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together. Private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us. When we all work together, we all win together. We're looking to build a tight-knit community of solid, like-minded people. There's a lot of crypto research out there. We can't do it ourselves, and the more we can collaborate, the better off we're going to be. So we can figure out what the tops are looking like if we actually have that extended cycle, and potentially hunt those lows when they come in. But that's a little bit further out, so don't worry about that one just yet. Outside of that, that is about it for this evening. Tracker, any final thoughts before we get out of here, sir?
Just want to give a shout out to Splash Mountain for the love there. He said that he mentioned us in the DGen roundtable, saying basically what he spent for the first month and Walk the Block membership, he's already made that back tenfold already because of some of the calls that we've already stated on, because the fact that, so one thing we don't do on this show is we don't get into a lot of the technical analysis that is really that flashlight in the dark. You might know kind of long-term or midterm where we're going and various plays that we like and what we're going after, but you don't know necessarily what levels you should be either taking some profits off or putting profits on. What are those good calculated guesses, basically, is what it goes into. All the things that we stack against it to come up with that. Jay, our TA guy, does a great job throughout the days. We do streams all throughout the day. We off and on throughout the day. There's a lot of streams going on, a lot of conversations happening. We are truly there to answer your questions and concerns to try to help you. It could even be as simple as, hey, how do I even set up a wallet? How do I even set up, all this stuff? And that's something else that me and Zenith have also been working on. We've been creating tutorials. Do you have the link out there, Zenith, to share everybody, like the crypto 101 stuff that we're starting to build out? I got it right here. I can send it to you. So what we've been doing is we've been creating videos. We're going to build out more. We have about a few more to go, and we will be diving in here. We've got a couple ones. We did one about a week ago on, so these two here, one's the history of money. That would be the first one you would want to watch. Really good tutorial on inflation and hedging inflation and kind of the US dollar. It's also the invention of Bitcoin, onboarding into cash. This is for somebody who just wants to get into crypto on a central exchange. And then all the different ones we actually liked that we've been stayed true and have been battle tested for many, many years, and taking you through all their portals of how to set up and do all the, the KYC and all this other stuff we can't absolutely stand, but we have to do it, and how to do all that and how to navigate it. And then also we had another one we just did about a week ago that'll be posted, which is on how to migrate all that money into DeFi and all the things you're going to need to do that. And we'll have probably some more in-depth videos going into the different wallets and things that need to be going on. So really touching on the fundamental aspects that I think some of us sometimes we think we know it all, but in reality, when you start to go in there, dive into it, you start to realize, okay, there's some things that have changed, or things that you thought were okay are not necessarily okay anymore. So it's one of those things you have to stay on top of this stuff.
Agreed. Mastering the basics is very important, and it's always good to go refresh on some stuff as well. There might be some nuggets in there and a little bit of a personal opinion on what exchanges, what wallets we like and we don't like for certain reasons, and might sway you. But yes, Crypto 101 stuff. We're putting out some free content on the YouTube channel. Please go check it out. Outside of that, we are also putting out a little more advanced crypto tutorials inside of the private Telegram. So if you're looking for that kind of stuff, check it out. I believe Agent J has posted his beginner's guide to technical analysis. So if you want to hear from the wizard himself, that's where it's at.
Now, Zenith, he did say we could post that here for that one there, that first one he did. So the Crypto 101 we could put out here so people can get a flavor and see what it is. We do, listen, yes, are we shilling ourselves? We are shilling ourselves, but we are also trying to build a community with people to get together and kind of help each other out during all this. And there's a lot of effort that does go into this. So thus why we are charging some for us. But if you compare our prices to everybody else, it's minuscule compared to everybody else. But we do like to put out content for people to see what we're about and all. Because last time we want somebody joining and realizing this is not what I wanted. But I don't think you'd be disappointed though.
That's true. And by the way, we're not charging money to buy Lambos and Rolexes and stuff. If anything, we're actually buying Agent J fancier tools to do better technical analysis with inside of there for you guys. It's not about Lamboing out. It's about building community and actually getting it going. So, dude, crypto tools are expensive. Let me tell you. I want to say if you want to get that business subscription to a Glassnode or the Bitcoin market website or whatever, it's like over $1,000 a month. It's pricey. So I don't know if we're there just yet, but we're building up. Outside of that, Tracker, do we have anything else for the good people this evening?
No, just try to get into the DGen roundtable. If you're not in there, that's a free Telegram that a lot of us are in there. I think we're about 420 strong in there, where we communicate and talk throughout the day. A lot of good information to keep people, you have that many people out there that are feeding and giving out information. It helps keep your up to state what current state is of what's going on in the crypto markets. Of course, we also have our Telegram private channels. We're in there trying to help everybody as well, putting a lot of good nuggets on there as far as things that we're finding. That's pretty much where you're going to find most of us at that. And then check out our content we're creating. We got more to come.
For sure. If you have any suggestions on what you would like to see, please put it in the private Telegram community. We do serve those guys first. So if you want your suggestion read first, that's where you got to put it. Outside of that, though, yeah, DJ Roundtable is where you can find a lot of the free content. It's the more or less family friendly version, if you will. We're trying to make a white glove service and a very professional product here. So that's what you can expect here. But DJ Roundtable Sunday show, we cover the news, chop it up, talk about markets, talk about everything going on in the news. We have a Whiskey Wednesday show where you can join yourself live on camera, ask us any questions, chop it up. And then on Fridays, I am joined by my excellent co-host, Mr. Will Stevenson, where we cover book club. This week, we're actually covering psychology of religious figures and trying to see if we can fit that model to how some people treat crypto founders in this space. Outside of that, though, we do cover some fun stuff, talking about some more like sales tactics, personal development. And then we did also recently do our foray on The Wealth of Nations by Adam Smith and Basic Economics by Thomas Sowell. So if you sit through those two streams, will personally write you an associate's degree from DGen Roundtable University for basic macroeconomics, because those were heavy. But outside of that, yeah, that is all we got going on. He's Tracker. I'm Zenith. You can find me on Instagram and X at ZenithDI. But again, better way is through the private telegrams. We will catch you guys next time. But until then, everybody stay frosty. The seas might get rough, but we're going to try to navigate them safely together. All right, everybody, have a good one. Good night.